Palantir opened 2025 with a surge in revenue and profit. In Q1 2025, revenue was $884 million. That's up 39% year over year and 7% quarter over quarter. This marks a sharp acceleration from the 18% year over year growth seen a year ago, driven by booming demand for Palantir's AI platforms, or AIP. The company earned GAAP net income of $214 million in Q1 with a 24% net margin, its largest quarterly profit to date. Adjusted earnings per share came in at 13 cents, rising from 8 cents in the prior year quarter and matching Wall Street's estimates. Palantir has now remained GAAP profitable for multiple consecutive quarters, underscoring a new phase of profitable growth. Their operating cash flow was robust at $310 million, which was 35% of revenue, reflecting improved efficiency, though down from the seasonally strong Q4 figure. Overall, Palantir's Q1 results exceeded its own guidance and analyst expectations on revenue, and it met EPS forecasts, which was a strong start to the year despite the high bar that the investors set for Palantir. Palantir's growth was propelled by its commercial segment, especially in the U.S. market. The company's total customer count reached 769 as of Q1, a 39% increase from a year ago. This expansion was fueled largely by private sector clients, with U.S. commercial customers growing to 432, up 65% year over year. In fact, U.S. commercial revenue jumped 71% year over year to $255 million in the quarter, reflecting broad adoption of Palantir's AIP by enterprises. This rapid client growth indicates that Palantir's investments in product innovation and sales are paying off. By contrast, the government customer base, while smaller and growing more modestly, remains highly strategic and sticky. Palantir's government segment delivered 45% year-over-year revenue growth in Q1, with U.S. government revenue being $373 million, and the company continues to win new defense contracts. For example, NATO recently adopted Palantir's AI-enabled military system, reinforcing Palantir's vital role in defense technology initiatives. This mix of surging commercial adoption and steady government demand bodes well for Palantir's long-term growth, as the company now serves a larger and more diversified customer base than ever. Palantir's sales pipeline and deal bookings are hitting new highs, indicating strong forward momentum rather than any slowdown. In Q1, the company closed 139 deals worth at least $1 million each, which is double the volume from a year ago, including 31 deals that are $10+ million. Palantir booked a record $810 million in U.S. commercial total contract value for the quarter, up 183% year over year. As I mentioned in a past Palantir video, this TCV, or total contract value, represents multi-year value of new contracts signed, a sign of unprecedented demand from enterprise clients for Palantir's platforms. Correspondingly, Palantir's remaining deal value, or backlog, climbed to $2.32 billion, a 127% year-over-year increase. This surging backlog, which also rose 30% sequentially in Q1, provides visibility into future revenue as these contracts are executed. Management noted that Palantir is in the midst of a tectonic shift in software adoption as organizations increasingly turn to Palantir to solve AI and data analytics challenges. The strength of Palantir's pipeline, from robust new deal bookings to expansions with existing customers, suggests its growth is likely to continue in the coming quarters. There is no sign of weakness in demand. On the contrary, these metrics indicate Palantir's product market fit, especially for AI solutions, is translating into tangible business wins and deferred revenue for the future. Palantir's revenue growth in Q1 2025 was broad-based across its segments and came with improving profitability. In addition to its record revenue and EPS, Palantir also continues to be a cash-generating machine. Operating cash flow in Q1 was $310 million, which is up dramatically from the prior year, when cash flow was roughly $187 million and represents a 35% cash flow margin. Free cash flow was $370 million with 42% margin after its capital expenditures. The year-over-year improvement in cash flow reflects Palantir's combination of strong revenue growth and disciplined spending. Notably, the company's headcount has not ballooned, which helped keep operating costs in check. Sequentially in Q1, cash flow was lower than Q4's $460 million, but this is typical due to seasonality in government payments and year-end contract collections. Even so, Palantir's cash generation remains robust. The company is using some of this cash to repurchase shares, about 2.3 million shares, which were repurchased by the end of Q1, which signals confidence in its financial position. In summary, Palantir's Q1 financial metrics paints a picture of a company growing rapidly while expanding margins. This is a rare combination that highlights the operating leverage in Palantir's business model as AI-driven demand surges. After its strong first quarter, Palantir management raised their guidance outlook for 2025. The company now expects Q2 2025 revenue of $934 to $938 million, which implies roughly 35 to 40% year-over-year growth in Q2. This is a sequential increase of about 6% over Q1, indicating momentum is continuing into the next quarter. Q1 is typically Palantir's slowest season. Palantir also guided Q2 adjusted operating income of $401 to $405 million, higher than Q1's level, reflecting further operating margin gains. More importantly, Palantir boosted its full-year 2025 guidance. It now projects $3.89 to $3.9 billion in revenue for 2025, which would be about 36% growth for the year. This is a sizable upgrade from the previous fiscal year 2025 guidance of $3.75 billion issued after Q1. In other words, management now anticipates ending 2025 with about $150 million higher in revenue than initially thought. This is an indication of escalating demand, and within that, Palantir forecasts U.S. commercial revenue to exceed $1.178 billion in 2025. This is a 68% growth year over year, and it underscores how crucial the U.S. private sector is to its expansion. Palantir also raised its profit outlook. It expects $1.71 to $1.72 billion in adjusted operating income for 2025, along with $1.6 to $1.8 billion in free cash flow. The company reiterated that it will be GAAP profitable each quarter of 2025. This updated guidance is well above prior consensus estimates. Palantir explicitly noted that it is, quote, crushing consensus expectations. For context, analysts before had modeled around 27% full-year sales growth and about 30% earnings growth. Palantir is now guiding for 36% sales growth and significantly higher profitability. By raising guidance this early on after Q1, Palantir management is confident that Q1's strength was not an anomaly, and CEO Alex Karp described the demand for AI-driven software from Palantir as a stampede. Despite Palantir's excellent results, investors must grapple with its lofty valuation. Based on the current share price, at $110, their valuation is way higher than market at about 74 times this year's expected sales and 195 times forward earnings. For comparison, the S&P 500 trades at roughly 2 to 3 times sales and about 20 times earnings, and high-growth software peers often trade at about 15 to 30 times sales. Palantir's EV to EBITDA multiple is likely in the triple digits, reflecting the fact that its GAAP operating income is still relatively small versus its valuation. These rich multiples suggest that investors are pricing in years of rapid growth and margin expansion ahead for Palantir. At 195 times PE ratio, the stock is trading at about 7 times its expected EPS growth rate of about 30%, indicating a lot of optimism already baked in. But Q1 2025 performance goes a long way toward justifying Palantir's premium valuation. Palantir is increasingly proving that it can convert AI hype into real revenue and profits, strengthening its positioning as a leader in enterprise AI software. The company's fundamentals, from customer growth to cash flow, are arguably the strongest they've ever been. But what this means is that Palantir's stock price leaves little room for error. The Q1 report was one of Palantir's best ever, but the stock dipped 8% after earnings, which is a reaction many attribute to profit-taking and the high expectations set by its valuation. For investors, the key takeaway is this: Palantir's future growth potential remains enormous, but much of it is already reflected in the stock's current price in the short term. But as long as the company can deliver what it promises every quarter, then the premium valuation is justified and it can only rise in the long term. Thanks for watching.